The Strait of Hormuz didn't get shut down by a navy. It got shut down by paperwork. That's the story the financial press got almost entirely wrong about the biggest oil supply disruption in history. And one of the few analysts who called this correctly from the start was Chris McIntosh over at Capitalist Exploits. While most of Wall Street was focused on missiles and military posturing, Chris and his team were tracking the insurance market. Here's what they saw. When the conflict broke out, the insurance system that covers 90% of the world's ocean-going ships pulled war risk coverage from the entire Persian Gulf within 72 hours. Transits through the Strait of Hormuz collapsed 81%. Not because of mines or missiles, because no insurer on Earth would sign the policy. That one decision took somewhere between 11 and 13 million barrels of oil per day offline. More crude than has ever been removed from the global market at one time. And the energy futures market? It's still pricing a return to normal in a month or two. In this video, I'm going to show you why that assumption is dangerously wrong. What Iran is doing right now that threatens the petrodollar system itself, and the one sector of the market that almost nobody has properly weighted for what comes next. A lot of this analysis comes directly from Capitalist Exploits research, and by the end, you'll understand why their work deserves your attention. So here's how this machine actually works. And this is the analogy Chris McIntosh uses that makes the whole thing click. Think of it like car insurance. You can own the car. You can have a driver. You can have fuel in the tank. But if nobody will insure it, you can't legally put it on the road. Global shipping works the same way. The international group of P&I clubs insures about 90% of the world's commercial fleet. When they say a region is too dangerous, ships don't sail there. It doesn't matter what any government wants. The Strait of Hormuz is 21 miles wide at its narrowest point. Every single day before this crisis, roughly 21 million barrels of oil passed through it. That's about 21% of the world's daily petroleum consumption. Picture a funnel. The entire energy supply of Japan, South Korea, and most of Southeast Asia flows through that funnel. And when the insurers pulled out, they didn't put up a wall. They just removed the reason anyone would risk going through. What Chris flagged early, and what most analysts missed, is what happened next. Iran saw that vacuum, and they stepped into it. They started offering their own guarantees, their own escorts, their own terms. And those terms came with a price tag, and a currency that should have every investor paying attention. Now let's look at the numbers. Because as Chris McIntosh and his team have been writing on the Capitalist Exploits Substack, the oil futures market clearly hasn't done this homework. Saudi Aramco's Ras Tanura refinery, the largest in the kingdom, was hit on March 2nd. Saudi production had been running near 10 million barrels a day. It's now materially curtailed. Aramco's own CEO admitted they're drawing down global inventories that were already at 5-year lows. That's not a fix. That's burning through your savings account. Then there's Qatar. 2 of Qatar's 14 LNG production trains were damaged. That's 17% of their LNG export capacity gone. 12.8 million tonnes per year. And here's the number that Chris highlights as the real story behind the story. Repairs will take 3 to 5 years. Not because of money. Because the gas turbines needed to power those facilities are made by only 3 companies on Earth, and their order books were already full before this started. Rystad Energy confirmed it. You cannot write a check to fix this. Qatar Energy declared force majeure on its entire LNG output. Kuwait did the same. And the CEO of Qatar Energy said, this crisis has set the region back 10 to 20 years. Meanwhile, energy stocks sit at just 3.89% of S&P 500 weighting. Tech is at 31.65%. Chris has been pounding the table on this mismatch for months. That ratio is about to get stress tested. So what does this actually mean for your money? Here's the part that could reshape how you invest in energy stocks for the rest of this decade. And it's something the capitalist exploits team identified as the real geopolitical shift hiding inside this crisis. As of April 1st, Bloomberg confirmed that Iran is charging ships a transit toll to pass through the Strait of Hormuz. Escorted passage, paid in Chinese yuan and crypto, not US dollars. Think about what that means. Since 1974, the petrodollar system has worked like this. Gulf oil gets priced in dollars. Those dollars flow back into US treasuries and US stock markets. It's the recycling loop that has kept the dollar dominant for half a century. And it runs on one assumption, that the United States can guarantee safe passage for dollar-priced oil anywhere on Earth. That guarantee just failed its biggest test. As Chris pointed out, Iran looked at what Egypt did with the Suez Canal in 1956. Egypt nationalized it, started charging tolls, and still collects them today. Iran just did the same thing with the most important energy choke point on the planet. And they're collecting in yuan. China's swift alternative, CIPS, processed daily averages of over $130 billion in mid to late March. The plumbing for yuan oil trade was built over years. This crisis didn't create it, it activated it. For investors, this means the flow of petrodollars back into treasuries becomes less reliable. And as Chris reminds his readers, global markets are built at the margin. Every government on Earth is now making the same decision. Move from just in time to just in case. This is one of the core themes Chris McIntosh has been building his asymmetric portfolio around at Capitalist Exploits. Japan understood this before anyone. They went into this crisis with 254 days of oil reserves. Most Southeast Asian countries have 20 to 50. That gap is about to close, and closing it means physical demand for crude, for storage tanks, for tankers, for infrastructure that was never built during the decade when energy was cheap and nobody cared. Chris frames this as two paths. Path 1, a resolution comes faster than expected. Energy prices stabilize, but the structural rebuilding of reserves and supply chains still takes years. The investment opportunity remains. Path 2, the disruption drags on. Rationing expands. Countries restrict fuel exports the way South Korea and Singapore already have. The energy sector, still under 4% of the S&P 500, reprices violently upward as pension funds and sovereign wealth funds treat energy security as a strategic imperative, not a checkbox. Either way, the physical infrastructure, the tankers, the rigs, the refinery capacity doesn't exist to meet this new demand quickly. The shipyards that could have built it closed during the last downturn, and that's exactly where the opportunity lives. Let me leave you with this. The energy futures market is pricing a disruption that lasts a few months. The physical reality is a disruption that lasts years. The petrodollar system just got its first real toll booth. Reserve stockpiling is becoming permanent government policy worldwide. And the sector that supplies all of it, energy, is weighted at under 4% of the S&P 500, while technology sits above 31%. Something has to give. Chris McIntosh has been ahead of every one of these themes. The insurance choke point, the petrodollar fracture, the energy underweight, the reserve stockpiling boom. He saw them coming, and he positioned his asymmetric portfolio before the crowd showed up. That's what he does at Capitalist Exploits Insider. Twice a month, Chris delivers his Insider newsletter and breaks down the macro, geopolitics and investing trends poised for growth. He provides specific companies that land on his radar, provides position sizing recommendations and the full thesis behind each idea. Not vague macro predictions. Actual names, actual numbers, and whether or not the portfolios he manages have exposure. If this video opened your eyes to what's really happening in energy markets, imagine what a year of Chris's research would do for your portfolio returns. Go to the link in the description and subscribe to Capitalist Exploits Insider on Substack right now. Because the energy crisis is just one of several massive themes Chris is tracking that haven't hit mainstream headlines yet. By the time CNBC is talking about them, the best entries will be gone. Don't be the person who watches this video, nods along, and does nothing. Subscribe today. The next big theme is already taking shape, and Chris's readers will see it first. Visit Capitalist Exploits on Substack, subscribe, and stay informed today.